Welcome to the Travelex Weekly Outlook. The dollar started the final week of July with a generally weaker bias, and that's as better performing stocks overseas and in the U.S. at the start of the day on Monday has helped to boost investor confidence, and that's when investors tend to flee the greenback and head for riskier assets. So as a result, right now we do have the dollar. It's at about a 3-month low against the British pound, while against the Aussie dollar, the U.S. currency is at a fresh 10-week low. Last week, though, we did see the dollar. It fell in the early stages of the week, hit a 10-week low against the euro. And that was as a continued string of poor U.S. data really undermined the outlook for the U.S. economy, and that hurt the dollar. The big event, though, last week was the results from Europe's bank stress tests. We saw that the results on Friday showed that 7 out of the 91 banks failed the examination. Those banks now, the unlucky 7, are now responsible for coming up with a fundraiser of about 3.5 billion euro. So on the surface, that was fairly good news. More banks passed than had been expected, but still, investors really doubt some of the kind of the makeup of the exams and whether or not they were that credible, since so many institutions had passed. So that somewhat really contributed to the euro's more muted reaction. Also, there was some investor disappointment that the test, they didn't really talk about what would happen in the event of if one of the nations were to default on their debt. So since that wasn't talked about, that really also kind of dampened the credibility the exams may have had. And so as a result, that continued uncertainty as to what would really happen in the event one of the European states default on their debt. So that continues to weigh on the euro's upside. But overall, we did see a more mixed reaction to the stress tests, and that really contributes to the dollar's, or to the euro's, more muted reaction. For the week, though, we did see the dollar. It did advance against the single currency. It was really on that uncertain outlook for the bloc's banking sector. Higher stocks last week. That also helped to underpin riskier currencies against the U.S. dollar. The dollar did turn in a weaker performance against sterling, the Canadian currency, and also the Aussie dollar. Investor confidence last week, we saw that boosted by some positive earnings results last week. That came by Apple and also by UPS. But still, given the gyrations that we saw last week in the currency markets, overall, the major currency pairs have really been confined to tight ranges. I think market players at this point are really looking for a fresh catalyst to really break out of some of these recent ranges. Consequently, that could come from the data that we see out of the U.S. for the final week of July. It is going to be a week that's chock full of U.S. economic indicators. We'll have the highlight for the week will be on Friday. That's when we get the U.S. GDP report for the second quarter. The week of July 26th, that'll also shed light on the U.S. housing market. We'll also get key reports on U.S. Consumer confidence and consumer sentiment. Of course, that's a key group that really drives the U.S. economy. And investors will also be on the lookout for the Chicago PMI survey. That's a gauge of Midwest manufacturing activity. If we do see any more discouraging news, that would tend to weigh on the outlook for the U.S. economy and hurt the dollar. But that's all we have for this week. For the latest on the dollar, please be sure and check us out online.